This is Don DeBartolo, a senior broker with Daniels Trading in Chicago. I'm also the publisher of the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week in question begins with Monday, November 12th, 2018. Before we look at the charts, please pause the video and read the risk disclosures so that you understand the risks involved with futures and commodity options trading. And a snapshot of what you should expect with the Trade Spotlight advisory service. This is the futures segment. There's the timestamp so you know when the trade recommendation is sent out. There's a write-up on the trade in question, the precise entry order for the trade, the initial margin requirement and maintenance margin requirement if it's a futures contract or writing an option or future spread, the stop loss and target so you know the risk reward parameters for the trade recommendation, and a link to have a visual of the chart. Okay, let's jump into our first chart for today. It's the December 2018 British Pound contract. There's a trend line that runs up all the way starting with the 12-month contract high from June 7th, which was 135.86. You'll notice here recently the market did not quite get up to the upper trend line. Ideally, I like to see a retracement back to the trend line and then another rollover to potentially take a short position. It just strengthens the trend line. If you have more, two touches, but 3, 4, 5 touches, now you have a stronger resistance level above. Because you can see the red line here, that would be my potential stop loss on a short position. We could take a sell order on a break of this low. This is Friday's low, which was 129.79. The market did close below a 20-day moving average, which is angled downward, and a 50-day moving average. That's a possibility. The MACD is showing strong momentum to the downside, though the trend is rather flat right now. So perhaps the retracement comes and then the hook over still with strong momentum and a reversal in the trend. That would be ideal. The downside target are these lows down here. This low right here is the 12-month contract low that was just put in recently on October 30th. That's 127.22. That's the potential downside target for this trade. So this may come out pretty quickly, Monday, or if there's a retracement, keep eyes out on your email for that potential sale order. The next chart is the March 2019 cocoa chart. And with cocoa, this is another potential opportunity to get short a market. There's a lower trend line with many touches. So this is a strong trend line. Today you can see we traded down to the trend line, but it closed higher. So not ready to take a short position just yet. Just below the market is a 20-day and a 50-day moving average. That 20-day moving average is 22.51. The 50-day moving average coming in at 22.20. Would like to see a close below this trend line and potentially below these moving averages, just again for a stronger confirmation of a downside move. There is strong momentum in the market, and it looks like the trend may be getting ready to turn over to a downtrend. This level up here is potential resistance. This high recently was 24.10 from November 11th. That would be the potential stop loss above that level. And the third chart for this video is of the February 2019 lean hogs. And this is an interesting chart because you see I have drawn off a potential 1-2-3 top formation. 1-2-3 top formation is a trend reversal. So a break of the number 2 point, this low that I have highlighted, which is from October 22nd at 58.77.5, would trigger a trade to the downside. However, seasonally, the lean hogs market tends to rise in price in November into December. So perhaps instead of breaking through this low, this ends up being a support level, and we get a setup to trade this market to the upside. You've got some flat moving averages here, the 50-day, 20-day, and 200-day, which is right at this level here. That comes in at 60.91 even. You know, that's an interesting level. We close below it. That is bearish, but all these moving averages are flat, and we can potentially get right back up into these moving averages. If we were to take a downside trade, I do have a potential target set up down at these levels. I'm using this low here, which is 51.95 from July 11th, but you can see there's the 12-month contract low just below there at 51.22.5. Just like to put my target order in front of those 12-month contract high and lows. Then I talked about seasonally, this market tends to rise. So if this ends up acting as a support level, we'll look for a potential setup to the upside. Then I have my targets up here back towards that number 1 and number 2 points. The number 1 point is from the 1st of October at 68.07.5. Obviously, depending on which direction this market takes, then the stop loss will be evaluated. I've put up my contact information so you can contact me directly with any questions. Local, cell phone. You can also text the cell phone number. It's a recorded line, and my toll-free number. Also, email address that you can email any questions about the Trade Spotlight advisory or markets in general. And if you're not a subscriber and you'd like to be one, go to the danielstrading.com webpage. Click on the advisories tab that runs across the top. Go under the technical analysis section and select Trade Spotlight. There you can review each segment and you can subscribe. It's a free cost to Daniel's Trading clients. If you're not a client of the firm, you can have a free 90-day trial, and then after that it's $99 a quarter. But you know, contact me. We can see about potentially getting an account open for you, and then don't have to pay for the service if you like what you see after the 90 days. Thank you for listening, and happy trading.